So, hello, and a massive hello to everybody. How we all doing? Rocking and rolling free world. Here we go. No trade calls, recommendations, or response for their own stuff here for educational purpose only. Let's do this. Again, usually, we get, again, the updates are based on market action and what's happening. So we could get one update a week or 5 updates a week. So it's been a little bit busy this week. So you're hearing a little bit more from me. As always, we're dependent on market action. We're not going to put out updates just for the sake of putting up an update. So what's happening here? Clearly, it's all about the dollar, right, after the Fed. Well, essentially, what happened, and again, if some of you want to, you can go on the blog. I put in open access to the session we did yesterday in the live webinar. I think it's fairly interesting to take the time to watch that. But essentially, we got the Fed. Trump wanted 50. He only got 25. So what does he do? He just goes out. He puts on a little tweet saying it's a mess in China. We're going to put more tariffs. And guess what, guys? Hey, presto, there we go. We go from about 40% chance all the way back to 84%. Another cut in September. Trump gets what he wants. So essentially, Trump keeps on playing the Fed like, it's just so easy. It's not even funny. And again, he'll just keep on playing that game. So we suspect that he's going to force this next high cut in September. He's going to keep on keeping the headlines hot with respect to China, and whenever he needs to, he's just going to go, okay, we've done a deal, and market's going to skyrocket, and he's going to go for the re-election. At least that's his game plan. The key thing to keep in mind here is it's all about the dollar, right? So here the focus is everybody's getting excited of the break of this break of the dollar, right? Where we finally broke above the 98. Remember, we'd been stuck inside this area for a long time, 96, 98. And now everybody's calling for 100 or higher. Clearly, if it holds the momentum, then it's going to squeeze and it could get very ugly. Our base case has been any kind of rally on the dollar is a sell. Remember, we've been talking about we're waiting for the earnings to finish. We're waiting for that Fed statement to come out on Wednesday, and then we go long dollar, long stocks into that, and then we sell stocks and we sell dollar, okay? That was our base case. So far, so good. And what's happened, how we closed yesterday was very, very interesting. Now, we'll have to see what happens with non-farm payrolls. Paradoxically, probably a good number is bad, right? Because good number means that the Fed probably is going to be forced not to, maybe to be a bit less dovish or more hawkish. So it might actually be bad for stocks. We'll have to wait and see. As always, it depends how the market interprets that. But I already sent an email out. What I think is particularly interesting here is, again, since we're talking about the dollar, is what's happening on euro. And I would draw your attention here that even though euro's trading heavy, look at the action around the 111. This is key from a day close. This is key from a weekly close perspective. I think one of the most asymmetric risk rewards setting up here is if this low holds here on the euro. See, you've only got about 5.5 to the downside. You could even get long with a stop below the next round number, essentially with a stop below the 110. Right? And you're risking less than 0.5% on this trade. And if we get the turn, and I'm already nibbling on this trade, right? And we get the squeeze back up into those moving averages, you're talking about, 1.3 to 2%. So I think it's an interesting risk reward on the trade. And this is a very important chart to keep an eye out for, right? Similar to this is what we discussed in the video I put in the tactical video also on cable. I traded cable to the long side yesterday tactically. I got out just, 10 pips, 15 pips, 10 pips, 20 pips here. But again, also on cable, if we hold here, right, and we get some kind of positive news, you could easily get a very quick spike of 3% to the upside. So I think even if you're looking at this from a shorter term perspective on intraday action, right, you could even be on a 1 hour chart. If at any time you see any kind of positive news that is actually seeing dollars selling across the board, or any kind of positive news out of Bojo, right? Any kind of stop, even if you're buying the break above this high here, you're still only be risking about 70 under 1% for a possible nice spike to 1 to 3%. It's a similar kind of thing on the euro. But going back to the euro, so what we said here on the euro, is this the start of basing euro and trying to get towards more positive momentum on the eurozone also as we go into Jackson Hole? This is an interesting level. Now remember, our base case was to long dollar and then sell them after the FOMC. And what's happening on the other pairs? Well, if you look at USD JPY, right, we were looking to get a chance to sell this in 3 different points, and we only got the first part off and routes back down. So this is a key zone, right? This is a key zone because either now all of a sudden we get a bounce, right? And this means that this euro trying to stabilize, this cable trying to stabilize is BS and they're going to puke, or yen breaks at this key zone and then we get bam, we get this flush we were looking for, and then we get all those euro and cable trades come in right in whack. What's the other key driver in terms of charts we were looking off and where we focus on is the Swiss franc. If you remember, our base case was to let this come all the way back into the confluence of 61.8, 50 retracement, the moving averages, and sell this again for another move back down. So this is also in play, right? Now we'll have to see if these moves get traction or not, but it's all down to the, here, what happens now with non-farm payrolls. If we get traction, then remember it's going to be Jackson Hole. Now, in terms of equities, what's happening on equities? Well, again, so far it's fairly classical, right? So you see we've got this first move down on the ES from those highs, and we talked about it. Below this break, we'd expect the next line to get challenged very quickly, and we got that straight away. So that first 2% move down is pretty much done. Remember, we talked about, anything from 5 to 10%. So today is going to be extremely key, right? And it's all going to be about how the market interprets the non-farm payrolls. If it's good, then we'll get the spike. If it's not, then we expect fully to see this accelerate back to the 2880, right? Which is the level we've been talking about, and continue on this possible correction down all the way into the 2800. I still think that in any case, on too much weakness, they're going to come in and stick save this with either some kind of China deal, but we're getting closer and closer to a liquidity event. And as I said, we've been always buying these dips. Yesterday was not a day to buy the dip, right? So very similar, nothing has changed on the ES in terms of the roadmap. If you look at the NASDAQ, very similar action on the NASDAQ, right? We're still in play. We think there's more downside. This is the key zone, right? Remember? Again, see how some people writing in, what's going on? Nothing's going on. Exactly what we thought was going on is going on, right? So you just have to stick to the plan. So if anything here, this would be the finishing of that 4 or 5% correction, and then that's probably first possible buying opportunity. And that would be on a decent reaction on non-farm payrolls. If we don't get that decent reaction to non-farm payrolls, then we'll be waiting to buy lower at the 200, right? And what's interesting is if you see on the Russell, you see how critical the situation is on the Russell, because it's right at that, around that 1550, which is such a key point. So don't think the market is dead, because it's still in the first support zones after this mild correction. Now we'll have to see with this non-farm payrolls if we're going to get the bigger correction or if it's just the smaller one. And as I was mentioning on Twitter yesterday also, the weekly closes are going to be key, right? Look at what the weeklies look like. This is engulfing 1, 2, 3, 4. Basically, it's engulfing the whole of July. The weeklies are also very interesting if you look at them in terms of location on the currencies. Look at the yen weekly chart. Look at how ugly this is, right? So it's really, really important zone. It's a really, really important inflection point. And what that inflection point is it has to do all really about the dollar, right? look at this. If we continue to get that dollar weakening, right? So basically euro rallying today, yen down, etc. Well, all the guys, once again, who bought that high and are all calling for 100, 104, and that all bought the break, we said it's important on these weeks. You have to wait for the weekly close before adjusting your macro view. As far as we're concerned, it's a newbie, it's a rookie mistake, buying the breakouts and not waiting until the weekly close, especially after when you know you've also got that non-farm payroll. So this is absolutely going to be key. We were sellers of the dollar, not on the buyers. Again, we've been wrong before. We could be wrong again, but we think buying those highs was a little bit of a piker move. It will be far clearer after the non-farm payrolls, but keep in mind that if this closes back below, then you're going to see all those people that got excited on Wednesday on the dollar move, etc., are going to have to completely change their mind, at least short term. So this is extremely interesting. Let's see what happens, guys. I'll try and send me an email if there's any other video, anything else you want me to update. And again, let's see what happens. Have a best one. Talk to you guys soon. All the best. Bye-bye.